I'm Caroline Hyde. This is Bloomberg Technology. Coming up, a rough week for the Trump administration, but the markets must have missed the memo. We'll analyze the winning streak as Apple and Amazon hit new records and T-Mobile pops on M&A speculation. Plus, tech meets sports in the Big Easy. We are live at the 2017 NBA Tech Summit with an all-star lineup from both industries. And while the heir to the Samsung empire contemplates his fate behind bars, we turn the spotlight on South Korea's culture of powerful family-run businesses. First to our lead, US stocks continue to drive higher on Friday, trading with all three indices closing in the green. This despite another week of political upheaval in Washington. One standout stock to note, T-Mobile US. Shares surged over 5% following a report that SoftBank would be willing to give up control of Sprint in a potential merger for the two mobile phone carriers. Joining us now for more context on investor sentiment is Bloomberg stock reporter Oliver Rennick from New York. Oliver, you just come off air from anchoring for a few hours and give us the hit, because it's interesting. Optimism is still really there despite travel ban mishaps, foreign policy issues with the national security team.
Yeah, absolutely. I mean, that's 100% the case, Caroline. We basically have been looking at not only just talking to investors, but looking at the numbers as well. I mean, all this stuff is pretty well recorded in terms of surveys for investor sentiment or about small company optimism. The numbers are there. They're surging the past couple weeks. I think what happened is there was a little bit of a pause sort of in markets, and then when Trump and his administration started talking about tax cuts again, and they started talking about spicing, the corporate business life with those tax cuts, that's when people started getting more excited again. And in the tease, in the intro, I mean, yeah, there's obviously quite a bit of turmoil going on in Washington. No matter, what side you're on, at the end of the day, two appointees now are not going to be there, and he's struggling to find replacements for at least one of those spots. So that being said, when we talked to all these fund managers, they did tell us, look, like, we're just kind of looking past it. This is what we're hoping for. And I can tell you more about that in a sec. Yeah. But actually what's really interesting is today we had a really bizarre move where we kind of came back in the markets and we ended up positive on the end of the day. How much is Trump? How much is the deal? Hard to say.
Yeah, we were in the red most of it, and suddenly we saw a surge at the end. Apple, Amazon, as I mentioned, at record highs. We're seeing the S&P 500 up for a fourth straight week. We haven't seen that since back in July 2016. But Oliver, I've also got to get your attention on one key tech stock we're looking at. T-Mobile US. Give a bit of a pop. M&A once again front and center.
Yeah, exactly. And that was the news that broke when Julie and I were on earlier. And this is a pretty big deal. I mean, these are two big companies. Obviously, this is a sector that a lot of people watch. This is going to be something that I think is kind of back on the table because perhaps the CEOs and the executives at these two companies that believe that the Trump administration could potentially be a little bit more friendly to this type of thing. They've kind of looked at this before, but that pop definitely did help the market. I mean, you look at the biggest sector move around the day, and it was the phone shares. I mean, there's only 4 of them, but it kind of lifted the entire group. T-Mobile jumped as well. But also, Trump has talked to Masayoshi Son from SoftBank before, and it seems like he has pretty good feelings about him, so maybe that has something to do with it as well. But that certainly helped buoy the markets in the later part of the day there. And then you gotta just look at the timestamp of when Trump started talking today. I mean, after his speech, the Dow jumped about 50 points and ended up in the green. So there you have it.
I mean, it really does seem to be perhaps regulatory winds blowing from Donald Trump, whether it's corporate tax as well. I'm interested in the overall geographical breakdown, though, because it's worth remembering S&P 500, up 5% year to date. Europe, not quite so much. Asia really outperforming. Are we seeing this sort of optimism purely from an internal political element with the US, or do we see global bull rallies?
That's an interesting point, because I was looking at the multinational indices this morning as well. And while there's, the U.S. is doing really well, obviously, we're up 9% after the election. As you said, about 5% so far this year. We're not beating every market around the world because there is still sort of an overhang of some degree of uncertainty in terms of what Donald Trump's plans are going to be and whether or not they're going to be implemented. But from talking to all the portfolio managers, my colleague Brian Chapana and I did a survey. We had a story on the Bloomberg today. We talked about 20 money managers, and regardless of their views on the politics itself and what's happening in D.C., they said, look, we went from an administration where we felt like we were being targeted and that regulation was the modus operandi. Obviously, when you look at the market, Obama was incredibly great for the stock market. Unprecedented rally by many senses. But right now, those small business owners do feel a little better. You see the optimism surveys. You see it in investors coming in looking at the market. The other thing is also from a technical standpoint, markets now are kind of going in different directions with companies, specific news and stuff like that. People like that, and they might think that that also is a good time to be in stocks as well. So I think that probably aids it too.
Yeah, I think that's notable that one particular tech stock underperformed this week. It seems TripAdvisor the worst on the S&P 500. Bloomberg's Oliver Rinnick, great analysis across this week's trading week. Now, President Trump's relationship with tech remains largely continuous, despite the president's efforts to listen to the industry's concerns. One of the Trump's most vocal detractors, though, during the election was serial investor and entrepreneur Mark Cuban. Bloomberg editor-at-large Corey Johnson sat down with the Dallas Mavericks owner at the NBA Tech Summit in New Orleans, where he spoke about the pros, the cons of President's actions so far.
I think reducing regulations. If you said, okay, Mark, if you were a politician, what's one of the first things you would do? I'd reduce the amount of regulation. There's just, we don't need 75,000 pages or whatever it is. So I think, whether or not all these things get passed or how they're implemented and executed, that's always a challenge. But I don't want everybody to think, well, I'm just a full-time critic and I don't recognize some of the positive things that they've done, particularly when it comes from a business perspective. I think there's some conservative Republican concepts that I, as an independent, can't agree with. Now, the devil's in the details, and you've got to be able to get them passed, and we'll see whether or not he does that.
But things you're critical of, you said?
No, stuff I'd torch him over, right? What he's doing socially, immigration, the EPA, who knows what's real and what's not, rounding up immigrants that are legally here. I think his implementations and execution of stuff is severely lacking, and I don't think they're thought through. But I think the bigger overriding, and there's 10 other things I can go through on that list, but I think the bigger overriding problem is in terms of leadership and management and personal issues for him. I don't think he's a leader. I think what people tend to forget now is that now that he's won the election, he's the president, he is also the commander-in-chief. And he's also in charge of the federal government. That's 4 million plus employees. Everything he says, everything he does, when he does the press conference yesterday, he's not only talking to the media, he's not only talking to the people who voted for him, he's talking to 4 million plus employees. He's speaking as the commander-in-chief to the military. And so when you do that, you have to come across as a leader. You have to show leadership qualities. And in order to show leadership qualities, you have to be able to admit a mistake.
Cuban also spoke about the outlook for jobs under President Trump and the role automation may play.
The only certainty about being the president of the United States is the uncertainty. You don't know what's coming next. And you've got to make an effort to always be learning, and you've got to make an effort to have at your disposal every possible tool, which this day and age includes technology. And I think that lack of understanding of grasp of any technology whatsoever is hurting him in his approach. And I'll give you the perfect example, jobs.
Okay.
Right? From the most basic, common sense perspective, how could it ever possibly be wrong for the President of the United States to sit down with the CEO of any company, particularly an industrial company,
right,
and convince them to build a factory and to hire people in that factory? And on a micromanaged basis, it's impossible to see anything wrong. On a macro basis, when you ask yourself what actually is going to happen in that factory, what technologies are they going to use, what is that going to gear them towards, unless you understand how the nature of work is changing and how this acceleration of technological change is changing
away from manufacturing towards the jobs.
Not just manufacturing, right? How we process information, how we automate automation. The point being that I'd be willing to bet every single one of these companies that are building these factories, those factories, and they still should do them, right? And I think indirectly he's benefiting those companies on a macro basis, but from the macro basis for the whole country, benefiting those companies, but on the macro basis for the whole country, every one of those companies that are going to be building new factories, their net employment is going to be lower.
Sure.
Once those factories are built, than than he even anticipates.
The new factories will have robots where they had humans in the past.
And they're just pushing them towards further automation, right? And further use of deep learning, machine learning, et cetera, right? It's inevitable. He couldn't stop it. But the problem I'm having with it is he doesn't understand the macro issues. He thinks he's creating more jobs when, in essence, that's not happening.
That was Bloomberg's Corey Johnson with Dallas Mavericks owner Mark Cuban. We'll bring you more live from the NBA Tech Summit in New Orleans later this hour. Coming up, Silicon Valley Bank is out with its startup outlook. The latest read on how tech entrepreneurs are weighing the current political climate. We'll discuss with CEO Greg Becker. That's next. And this is Bloomberg. Now, the current political environment has entrepreneurs wary about the future. That's according to Silicon Valley Bank's Startup Outlook survey. It found that tech entrepreneurs are less optimistic this year amid growing uncertainty about funding and access to talent. Joining us is Silicon Valley Bank CEO Greg Becker. Great to have you in the studio with us, Greg. Back. And optimism is shrinking, but perhaps not that surprising when you realise that all of this data was brought just after the election here in the United States.
Right. So we did a poll. We do a poll every year, and so we polled roughly 950, mostly startups from around the United States, but also around the world, kind of got their perspective on how they're feeling about the market, what are their challenges, and so that's the main part of the survey. It was interesting just from a timing perspective, because when the timing came out, we saw the highest level of, I guess, lower optimism. So always optimistic. Technology companies, you have to be, right? And so what happens, though, is that given the timing, there was just so much uncertainty, we felt that we saw a drop. And so it went from kind of the 70% feeling that this year would be better than last year, to 60, and this year was the lowest we've seen since we were doing this survey, which was 57% believed that 2017 would be better than the prior year.
Along with that, it was interesting that perhaps since then, they've then had on top of the uncertainty some concerns about travel bans being put in place, whether that impacts the reach for talent. One thing that really struck me was there are signs that finding the right talent is actually easier. Can you break down why? Because the main key issue for many an entrepreneur is I can't get the right engineering talent.
Yeah, so it was a slight decline. It's still the hardest part is finding the right talent. It's still the most important thing. So it did decline, and I think it was actually because there's fewer companies that are actually out competing for talent, the same way that they were in 14 and 15.
So they're not expanding so much?
So I think that's good. But I also think that if you took that survey today, with the travel ban and the fear over immigration, that would be higher. Because I think there's going to be more of a concern that can they find the talent? We're not graduating enough U.S. students and U.S. residents actually to fill these tech jobs. And so I think they would actually be more concerned if this survey was done today. Interestingly,
you did in the United States predominantly, but you also got a lot of companies in China and in the United Kingdom. Is that something, the concern about talent, particularly with the UK in the process of leaving the EU, is it talent that is a worry there as to whether they can lure in EU-based?
Absolutely. We saw the biggest pickup in, I'd say, concern. Definitely their optimism was even lower than it was in the United States. And I think, again, the fear of Brexit and what that was going to entail, we saw that playing out. They're more nervous about being able to try to find that talent for the same reasons in the U.S. It's just more, I guess, front and center when the survey was done in the UK. Will they be able to find the talent? In the UK, will immigration reform, how will that play out? All those sort of things in the UK. So yeah, it's a challenge.
And are entrepreneurs leaving the UK, going to set up shop in Berlin, in Paris, in Stockholm instead? Yeah, we did, in this survey, we asked the question. So what do they believe they'll be doing over the next 12 to 18 months? And what about 25% of them said is that they're planning to open up an outpost in Europe. A smaller percentage were considering moving their headquarters out of the UK. So yes, we're seeing some, I guess, issues around the Brexit, not as much as I think maybe the market assumed would happen, mainly because you still have to remember technology companies are incredibly resilient, and so they'll figure out a way to deal with it, but we did see a higher level of them looking to Europe. Let's get upbeat now, because there is a lot to be upbeat about in your report. More M&A, more IPOs. Can you give us a sense of how much more we might be seeing?
So there's a couple pieces to it. So yes, we believe it's going to be better than it was in 2016, but we have to calibrate that. 2016, from an exit perspective, especially IPOs, was a very low bar. So it doesn't take a whole lot to be better than we were in 2016. Our forecast, as we look at it, is that we believe tech venture-backed IPOs will be up roughly 2x to maybe 3x. So going from, I know it's a small base though, going from 15 to maybe 30 or maybe 45. And it's for a few different reasons, right? So one is the bar was low from last year, number one. Number two, you see these companies are continuing to mature, and the market overall is still very strong. So the economic numbers that we're all seeing, you know, they're actually pretty positive across the board, and so they're optimistic for those reasons. And so we're excited about this year being a much stronger year for liquidity and exits.
When we're looking at the M&A exit path, because that does tend to be the more regularly used when it comes to these sort of tech startups, who's doing the buying? Is there any influence from the data in that respect, whether it's from conglomerates from abroad, older companies, publicly listed companies within the US, UK, China?
Yeah, so the answer is yes. It's all of the above. So you can look at companies last year that were acquired in traditional industries, so Jet.com getting acquired by Walmart, a very traditional business model. Then you can look at AppDynamics acquisition by Cisco this year, which was a really, really big bellwether. So
not going for the IPO market, but never mind.
Yeah, no, I know, but look at the exit, right? You look at the choice that the management team had to make, right? You can look at the cash today versus the IPO, and I'm sure they would have done one great from an IPO perspective, but that's a lot of money to pass up that you get right now. So we're looking at it, and it's both non-tech and technology companies that'll be doing the M&A. And look at the stock market. So their market caps are a lot more valuable. They have a lot of cash, and if we see repatriation in the tax reform, you could see even more M&A. So we're optimistic for those reasons.
Greg Becker, do come back and speak to us again. It's been fascinating
Absolutely.
to dig into
Great
all the data in your data release, of course, the report from Silicon Valley Bank, and that was its CEO. Now, still to come, we take a closer look at the chaebol culture of South Korea and how Samsung is in the crosshairs. Could just be the beginning. This is Bloomberg. Now, Samsung heir apparent J.Y. Lee awaits a South Korean court's decision on allegations of bribery, perjury and embezzlement. It's all tied to a special prosecutor's investigation of a sprawling political scandal that's already led to the president, Park Geun-hye's impeachment. And it puts the country's unique culture of massive family-run conglomerates under intense scrutiny. Joining us now for more on this is Troy Stangarone in Washington. He's senior director of the Korean Economic Institute and an expert on the ties between South Korean business and politics. And Troy, first of all, can you give us a sense of whether Samsung is the start of something else and wider? What other conglomerates could be hit by this?
Well, the current special prosecutor had said recently that he has only had the opportunity so far to basically investigate the ties between Samsung and Chae Soon-sil, who this whole scandal with Park Geun-hye is tied around. Now, that being said, there were a series of chaebol who both were brought before the National Assembly earlier to testify and who also gave donations to Chae Soon-sil. Some of them, such as Lotte, had lost special duty access for duty-free stores and then gained it back during this period. You also have other companies that were involved in tax evasion scandals. So the special prosecutor now is probably going to look into a lot of these situations. And he's also asked for an extension of time to do further investigations.
How destabilizing could this be for the economy of South Korea if chaebols are sort of unwound to a certain extent?
Well, traditionally they've been run through the families, and without the head of the family in charge, there's been no essential authority to take and make major decisions in terms of how to do new strategic moves, new investments. And so the question becomes, if many of them were to take and lose their head, such as Samsung right now, for an extended period of time, would they be able to take and continue to remain market competitive by making new strategic decisions? Now, that being said, many of them tend to have caretakers in place when these situations happen, and they should have a plan in place, but it would be somewhat unique if we saw this happen now.
You're a man who worked on Capitol Hill. You're a man who has great insight into trade and foreign relations when you worked on Capitol Hill. Can you give us the trade and foreign policy element of South Korea now, working with the new administration in the United States while North Korea is firing off missiles? What does this mean when they have such scandals within the internal economy as well?
Yeah, this is a difficult moment for South Korea. You have a new administration in the United States that is very focused on job creation in the United States and is very focused on reducing deficits with the United States. South Korea has traditionally had a trade surplus with the U.S. Now, last year that went down somewhat, so that's an improvement. But we've seen so far, when Prime Minister Abe came to the United States, the one thing he did was to come forward and say, listen, I've talked to my companies, here are the types of investments we can make in the United States. Now, it's going to behoove South Korea to be able to do the same. But if you have a situation where Samsung or others are essentially sort of pulling back and taking conservative moves, whoever the next president of South Korea is, when they meet with Donald Trump, it's going to be much more difficult, I think, for them to come through and say, Mr. President, here's a package of jobs through investment we can bring to your country. And so it puts South Korea somewhat at a disadvantage. Now, that being said, oh, sorry.
Sorry, we've only got about 30 seconds left, Troy, but I did want to get your point of view. When 2 p.m. on Saturday, we understand Jay Wiley is going to be called up in front of the court once again. This might not be that disastrous for Samsung as a whole, though. They're very siloed.
Yeah. You have a situation in Samsung to where you have professional managers in each of the divisions. They should be able to take and continue running the company. It would really only be, I think, in the long term if he were removed where you might have an issue.
Incredibly eloquently, quickly put, Troy Stangarone. We really thank you for your time. Senior Director at the Korean Economic Institute. I'm sure we'll be calling on your expertise again. Now, coming up, we'll wrap up the week in tech. The countdown is on for Snap's public debut. Can the company live up to the hype? This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde. And T-Mobile US rose more than 5% in the session, hitting a new 52-week high. This after Reuters reported SoftBank, the controlling shareholder in Sprint, wants to approach Deutsche Telekom, well, that's T-Mobile's parent, on a possible deal. Joining us now is Bloomberg intelligence analyst Matthew Canterman, who covers the telecom services and equipment sector. Matthew, break it all down for us, because the timing is intriguing. They're actually not meant to be chatting to each other at the moment, SoftBank or Deutsche Telekom, because there's a gag rule out at the moment as they go in for yet more bandwidth.
That's correct. They're in the middle of a spectrum auction. It's a 600 megahertz auction. It's T-Mobile's involved. Sprint's actually not. But basically the rules in the short form bar them from talking to each other. It bars them from discussing what the FCC calls post-auction market structure. And so basically the carriers take that as a gag rule. They don't want to risk losing out on any valuable spectrum.
Why the excitement now, though? Because it was 2014 when we last saw that Masayoshi Son wanted his into looking at T-Mobile US. It wasn't allowed then because of regulation. We know since August he's been eyeing up the business once again. Why suddenly the flurry of excitement?
Yeah, so I think number one is we're getting clarity on the timeline of when this auction is actually going to end. You know, we estimate sometime between the beginning and the middle of April, and so that lines up with the Reuters story well. When the quiet period actually ends. So that's kind of point one. And point two is just the new regime in Washington appears to be much more favorable towards consolidation, not just the DOJ side in the White House, but also the FCC. Ajit Pai, as a Republican, just took over from Chairman Wheeler, who did preside over some of the more stern regulations, and he blocked some deals. And so with Ajit Pai coming in, you know, he's focused on rural broadband pretty much as his mantra. And so if these two carriers can come together and promise to continue to build out LTE and eventually 5G into the rural parts of the country, he could be on board with that.
It looks as though Masayoshi Son, the leader of SoftBank, would be willing to compromise, though, to get this through the regulators. It sounds as though from the reports that he would be willing to let go of control of Sprint if they went for T-Mobile US. What's therefore the upside in combining? Can you just remind us of the rationale for 4 becoming 3 in the US?
Yeah, I mean, Masa just plowed billions of dollars into buying up almost 85% of Sprint over the last few years. He's concerned that his investment is going to go away. You know, if you look at the Western telecom markets around the world, look at Canada as a great example. You have 3 large, very profitable carriers. The U.S., we have 4, 2 that are large and profitable, and 2 that are much smaller and have lower margins. It begs the question, do we need to be in a market that's a 3-player market and not a 4-player market? And so clearly he sees that, you know, possibly we need to go to a 3-player market, so that way these 3 companies can all be viable and sustainable in the long term with profitability. And so, you know, he might be saying, I'll lose control now to earn return on my investment long term, as opposed to watching this potentially go away.
Interesting. We'll be following this story closely, and your analysis, Matthew Hanterman of Bloomberg Intelligence. Thank you. Meanwhile, anticipation is growing for Snap's IPO. This, of course, the parent company of the social media app Snapchat, releases a video and readies presentations to investors in a roadshow leading up to the public debut. Earlier, Bloomberg Technology reporters Sarah Fryer and Alex Webb joined me to discuss Snap Plus with some other key tech headlines grabbing our attention this week.
These investors are going to come into the roadshow, and their first question is going to be like, what are the things on the market that are already out there that I can compare this to make sure that the valuation is right, to make sure that the stock is priced right? And what Snap is doing in its roadshow is saying, we're different than those guys. Yeah. We can't really be compared apples to apples. We don't have plans for international growth and to be ubiquitous in that way. We don't really want people on our platform to have friends as many as they possibly can. We want it to be a small community. We want to focus on storytelling, and we tell stories in a chronological way as opposed to a reverse chronological way. They're really just trying to explain what they do, because people, honestly, are not that sure.
They're not that sure. It was interesting, I thought, that the reason they're not that sure is because, of course, it's targeted at millennials. I think we just about hang on into that gross generalization. But there is an element in the video that's trying to show that older people are perhaps liking it. But you're right, nothing about the developing markets, because they need powerful phones.
They need phones that can handle the videos that they send, the lenses that you put on your face that turn you into a puppy or a dragon or whatever they might do. Those are things that require a good connection to Wi-Fi and 3G, 4G, 5G, whatever comes in the future, right? So this is something that is really important to their growth and the kind of advertising they do, which is mostly video.
And you're on the road, following the roadshow, of course, that kicks off for Snap, the owner of Snapchat. I want to bring it back to those record highs, though, that we've been seeing this week. Apple, Amazon, both still at record highs again today. Alex, you cover Apple so well. The record, is it Trump or is it actually the phones?
I mean, it's a combination of both. Essentially, after their earnings last time around, a couple of weeks ago, they saw a huge bump, a 6% bump on the day of the earnings, and it's casual $40 billion between friends, which is, a huge amount of money. It's the size of any other company. It's double what Snap is expected to be valued at. But then since then, it's been tracking the market, and that has kept on with the growth. It's brought them to these record highs. Interestingly enough, it's not a record market capitalization because they have done so many buybacks that there's not as much stock out there in the market. But yeah, it's a combination of those two factors.
And as we continue to see this progress, is there now so much baked in terms of hope of the iPhone 8 that might be unveiled? How much do they need to keep on divulging to the market to not just all be about the corporate tax rates that might come down and the money that they can get from abroad?
Well, I mean, Apple's terribly secretive. We know this, and I have to deal with this every day. But so the iPhone 8 tentatively sometimes call it the iPhone X, representing the 10, because it's the 10-year anniversary of the first iPhone. There is the expectation that it's going to be a far more significant upgrade than the 7, which was released in September. Now, because the sales of the 7 have actually been surprisingly good, that means that the value of the Apple brand is still surviving, essentially. So if people are still buying it based on the brand, that means if they have a blockbuster product coming out, then the investors are getting very excited. They're like, well, people are going to go crazy for this phone, or at least get more enthusiastic about it than they did for the last one, and they will do good sales numbers. That's the expectation, at least.
That was some of my conversation with Bloomberg Technology reporters Alex Webb and Sarah Fryer. Coming up, much more from the NBA Tech Summit in New Orleans. Our exclusive interview with Ted Leonsis. That's the founder and CEO of Monumental Sports and Entertainment. This is Bloomberg. We've been live at the 18th annual NBA All-Star Technology Summit all day here on Bloomberg, a conference where entrepreneurs can kickstart innovative sports tech ideas into expanding companies. Ahead of the All-Star weekend in New Orleans, Bloomberg's Corey Johnson caught up with Ted Leonsis, founder and CEO of Monumental Sports and Entertainment, and asked, well, what he thinks of the NBA Tech Conference.
I give the NBA a lot of credit. This tech conference has become like the TED conferences. The quality of the speakers, the quality of the people that they're bringing in has been superb.
It's amazing the collection of people and talent that the NBA attracts, not only from the NBA team ownership groups, but all of the league partners. I mean, you get some of the major Silicon Valley players and big tech brands that everyone is familiar with. To have everyone concentrated in one place for one weekend is just sort of an unbeatable experience.
There was some talk this morning about direct connections with fans, more direct connections with fans. I'm struck by that and the parallel with DraftKings, which you're an early investor and a large investor in, and the acceptance of gambling in ways that weren't really imaginable, I think, 20 or 30 years ago by the major leagues, what are the major sports leagues. What do you think that is all about?
Well, I think that indoor sports are ascendant. NHL, NBA, that's why we just bought some AFL, Arena Football League teams, because you can track and monitor very crisply and clearly because of the contained nature of the arena. And the more we become a big data company, the more attractive we'll be to Gen Z, to millennials, to sophisticated people who care about Wall Street. And we want to be big data companies, distribution of that data and content. And so being able to go direct to the consumer, I mean, we look like SaaS companies now. You look at a sports team, sure, you look, it's why Steve Ballmer, I believe, paid $2 billion for the Clippers. I think he looked and saw that just like a big software company, we've got 20-year deals with our sponsors that have built-in 3.5% increases. We have suites that are on 5-year contracts. We have annual contracts, season tickets that we renew at 95%.
Accessibility is pretty key to us, right? So we like to pride ourselves on being a multi-platform company. You can watch our games on cable, or you can download our new over-the-top service, Monumental Sports Network, and have more touch points to our teams at lower cost, economic price points and the like.
Part of that?
I believe that sports is the great convener, and you sit behind a screen and you're watching the game, and now you're interacting. And the first application was you're communicating, you're talking to your friends, you're in a community, and now you're starting to have real interest in the outcome of the games and the plays, and that's fantasy. It's daily fantasy is what really took off. But the next big growth area for media content and team owners will be gambling. And it's just a matter of time. We see what's happened in Europe. We've made a big investment in a company called Sport Radar. Sport Radar.
What is that?
Sport Radar started life as a way to do integrity assurance to make sure that betting, gaming, the odds were level playing field, and it connected the casinos, the gamblers, and the leagues in Europe and then in China.
Because in Nevada, you can't have the sports books talk to the other sports books. It's part of the way the law is written.
That's right, but makes no sense.
So, all right, another question. Given the success of the league right now, even the D League, now soon to be called the G League, right? You've got all the team values going up and looking for new revenue sources. I can't think of a single reason why there isn't room for at least one expansion team.
Well, right now, an expansion team would cut into the media revenues.
But you're making the case for another team still, that could happen in one more place.
But if you brought in another team, the price of that team would have to be over $1 billion.
That was Ted and Zach Leonsis from Monumental Sports Network. And there were many other tech titans at the NBA Tech Summit, including Take-Two Interactive chairman and CEO, that's Strauss Zelnick. He told us how his company is trying to create games that are on track with professional teams.
But what we're trying to do is create a competitive gaming environment that tracks as closely as possible the actual NBA environment. So there will be teams, there'll be professional players who will get paid, there'll be salary caps, there'll be general managers, and one could even imagine the E-Knicks, the E-Lakers, and I think that's how it will develop.
Now let's get out to New Orleans and Bloomberg editor-at-large Corey Johnson. What a day. You've even been speaking to the legends of this area, the owners of Golden State Warriors. What have you been taking away? What's really caught your interest?
Well, so this is All-Star Weekend, first of all, is this amazing event
anywhere it goes, any year. But to be here in New Orleans during Mardi Gras is a particularly interesting time. So we thought we'd come down to the French Quarter here, right here on St. Louis Street, right off of Bourbon Street, so you get a real sense of what's going on in the city right now. But you know, when we talk to the NBA owners, of course, they're all about business, and their business is increasingly all about technology. And no team has exploited that more, arguably, than the Golden State Warriors, where they've had this tremendous success on the court. But they've, as a business, they've managed technologically to know their customers better, to raise their ticket prices, to raise their revenues, and they've done a lot of that through technology, data mining, the kinds of stuff you're hearing Ted Leonsis talk about is something I think all the league owners are looking at, and that's what they were studying in New Orleans today at their NBA Technology Summit.
And then what about some of the key takeaways in terms of the technologists that are there? They're obviously the big owners of some of the NBA key teams, but what about the tech that we're seeing on the ground? We're just hearing from a gaming element there.
Well, look, I mean, arguably the biggest thing that's ever happened in sports, in terms of sports ownership, is the technologist of Steve Ballmer spending $2 billion to buy the LA Clippers. And that, of course, catches the attention of all the owners of these teams because they want to know if the value of their assets are up. But they also wonder where the revenues are going to be to support that $2 billion valuation. So I talked to the owner of the Boston Celtics and the head of Bain Capital about where those valuations are going to come from, where those additional revenue streams are going to come from. Guess what? He said social media. Check this out.
Sports is a great aggregator, and then the technology has even enhanced it more. As you know, when you watch games at home now, you get 3D angles. You can be on Twitter at the same time as you're watching the game, social media. So it's been the #1 thing in driving kind of the voracious interest of media. And now you can get it 24/7. Mobile devices have also changed the whole landscape where people are checking on their teams, and so sports has become very valuable.
So it's an interesting time for the NBA, truly, when they're starting to look at all these other places revenues can come from, which is kind of hard to imagine if you think about the league 20 years ago, which, Caroline, I know you think about the NBA 20 years ago a lot. Well, I do.
I do. It keeps me up at night, in fact, what was going on 20 years ago with the NBA. But you were sat down with people that you've been talking to in the market for a long time. A great interview at length with Mark Cuban that you had, indeed. That was largely around Trump. Oh, yeah. But how is the political environment, the administration, affecting these businesses?
Well, so I think, you know, I think everyone's really focused on what's going on in the White House right now and wondering about this dramatic change that we've had in this country and how that's going to lead world policies and what it's going to mean for business. And these are people, you know, one of the secrets of NBA team ownership is that in that business, the businesses don't make much money at all, but the valuations keep going up. So for tax purposes, some of these owners really like being able to put these teams in a trust, pass on this asset that doesn't actually create much of a tax problem for them, but the asset value rises so much over time so they can pass it on to their kids without those taxes happening. So that's certainly something that owners are focused on.
Yeah, and are all these owners in it for the long haul? Is there any M&A that we're expecting within the NBA, or are we going to see purchases of more tech companies as well to add to their armory?
I mean, I think one of the interesting things here is that involvement with technology, not just in terms of team ownership and teams changing hands, and certainly that's going to happen over time, but also the other businesses that are getting big and massive around that, not least of which these esports. We talked to Strauss Zelnick about that, and he talked about these massive opportunities that are happening where people are paying great money to watch other people play games. Check out what he had to say.
You really can't try to get me to believe that people watch me play a game electronically. Well, 250 million people around the world do just that. And about half of that audience is avidly engaged in watching competitive gaming.
So again, video games a huge part of the business around the NBA. Esports is a growing piece of, again, another revenue pie for those league owners, for the league, and for a lot of companies around it.
See how they capitalize on that. I want to see how you capitalize on your weekend in New Orleans. Send us some Instagrams, send us some tweets, let us know what you're up to on Bourbon Street. Bloomberg editor at large. That was Corey Johnson, of course. Coming up, SpaceX is gearing up for a launch this weekend. Its 10th resupply mission for NASA. Details just ahead. This is Bloomberg. Now, as we wrap up today's show, here are a few more headlines that caught our attention. It's good news for YouTube viewers. Google has announced that unskippable 30-second advertisements will be killed in 2018. However, 15 and 20-second ads, well, they'll continue to surface the video streaming site. According to reports, the company plans on shifting focus to commercial format advertisements that are more engaging for both the viewer and the advertiser. Meanwhile, Ford has noticed a problem during test drives of self-driving cars. Engineers monitoring the robot rides have been dozing off. That's led to the company to a radical decision. Ford will try to solve the issue by removing the steering wheel, the brake and the gas pedals when its driverless cars debut in 2021. Now, other automakers believe the driver can be counted on to take the wheel if an accident is imminent. And in this edition of Out of This World, SpaceX CEO Elon Musk says his company is investigating a small leak on the upper stage of a Falcon 9 rocket. It's scheduled to launch on Saturday and deliver cargo on behalf of NASA to the International Space Station. This would be SpaceX's 10th resupply mission for NASA. And to mark the occasion, well, SpaceX is using a historic spot for the launch at Kennedy Space Center, the site of where the Apollo missions launched. Now, that does it for this edition of Bloomberg Technology. Remember, all episodes are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. Wishing you a wonderful weekend. This is Bloomberg.